Hey everybody, how are you? It's the Crypto Sniper, that's right. We're taking a look at crypto for a while now. I think crypto is going to be coming very much back in favor. So remember what we've said all along, that this has been continuation pattern, this pullback period. We are going to resume to the upside on balance of probabilities. That is our anticipation. So we're going to take a look at Bitcoin today. We're going to take a look at a couple of other things. We're going to look at FBTC. We're going to look at Binance, because we've spoken a lot about Binance as well in terms of the charts and how we think things are going to be panning out. And there's real opportunities for you to outperform the Bitcoin up move and the resumption. So officially, in terms of narrative, I think it's new ETF hopes. That could be maybe Ethereum ETF. Who knows what the supposed story is that gets assigned to it. We look at the end of the day of the technicals. When do you move? Also, before we dive into the charts, I want to highlight a key aspect to you. That was a beginning of a pivot, and this refers to the dollar. So in terms of the last non-farm payrolls that you could have joined us for a live trading day on, we felt that there could in fact be inflection point, because you've had a dollar dominance generally going for since March, 2-3 months. We felt this could now change, because the weakness in the economy is such that it's now becoming difficult to mask, and they're going to start letting those data and aspects seep out. And that's what happened on non-farm payroll. So many of you, we're talking crypto, but here I am talking about a traditional market aspect which involves the dollar. And what happened with regards to the prospect for rate cuts was the following. You undershot on the non-farm payrolls new jobs number, which is distorted by the birth date model. You undershot on the rate of earnings growth, which is another negative. And you overshot on the unemployment number. So that was the first Friday of this month. That's still now a handful of weeks back already. But more recently, namely last week, the CPI numbers came in, and this showed a further continuation of trend. You see, not only do prices trend, but data series also trend. And we had dollar stronger than you think, economy supposedly stronger than you think for a sustained period. The truth of the matter is, when we had 2 negative quarters of economic growth, that was a recession. But Granny Yehudi Yoda actually decided that no, employment is good and 2 negative quarters is not a recession, and suddenly the rules changed. You see, you can do that if you are into inversion perversion and just twisting the rules to suit whatever your narrative is, and that's what they did. So the not recession, and what continued to happen was, look how strong employment is, look how strong employment is. Now you're getting a much deeper recession. Now, of course, this happens as a result of a very steep rate of increase in interest rates that occurred due to the not inflation. You may remember the not inflation that suddenly turned into the transitory inflation, that turned into the not so transitory inflation, that turned into the very serious inflation problem. So this is how they lie to you. They concede ground. You only have to look at the in the shoulder thingy, and how the narrative gets out in the end of the great lies, and how the MSM, the mainstream media, the financial press, etc., eventually slowly seep everything out until they're back to being so honest and truthful again, after diverging rather strongly and saying certain people should be locked up inside for not complying with experimental medicine. Well, in the same way with financial data, you get the same thing. In the same way you get technical price trends, you also get data-based price trends, and we expected an inflection point both on the first Friday of the month, this month that is, which was the non-farm payrolls number, and subsequently in the follow-up CPIs, which actually turned into a more dovish environment for the dollar. What has this done for crypto? Until this occurred, we had not much to report. Congestion, non-trading environment. If you're a net long bull market investor, you just have to sit it out. We did in fact dip as low as the 56s on the one point at around 56,000 on crypto, and you just wear it if you're in for the macro bull market and you're unleveraged. In terms of the occasional spice it up with a tiny bit of leverage with stop losses, there wasn't much to be done in crypto during that period. Now we feel that's changed, and continuation is back in trend, and it's changed with the change in the trend of the data series, which is repricing the possibility now of some, much less than you think, but some possible rate cuts and a loss of power to the economy being so obvious that they can no longer lie about it. So let's have a look at that Bitcoin chart after explaining that. Boom, here we go. So we've drawn this. This is actually a 6 hourly, so some of you might not recognize it straight away. Of course, we can show you the big macro, but we've covered all of this. This has all largely been a continuation period. You can remember the high over here. Let's take that annotation out. It's a bit dominant. You can remember the high in and around 74, and we've had ups and downs subsequently for quite a while. Now, traditional technical analysts that don't know the HVF method will come storming in and say, that's not a right shoulder. They're referring to this rather small, and they would be correct if they referred to it as small, little kink and dump and subsequent pump break that we are calling. And that's very typical of traditional technical analysts. This is what we call complexity in head and shoulders, and it's expected. And when you've had a grind buying up, such that you end up getting an ascending structure that is very much like a rising wedge, only it breaks to the upside, known as a type 3 rising wedge. In other words, it wasn't bearish enough during this period even to make a standard HVF. It was leaking out the top. A standard HVF is quite common on the right shoulder. And sometimes you even get an inverted one on the left shoulder. Something like this, for example, would be an example of an inverted. You didn't get that on the left shoulder. You had quite a clear-cut break. You've rallied. You had your shooting star there. We call that armpit 1. That's it over there. And that is the interaction with our chosen neckline, which, as I say, many won't understand, and it's not for them. We are giving you HVF methods take and how we see complexity. In short, you were super strong here, and from here you were under some pressure, just not strong enough. You were leaking out the tops and grinding up the highs. That is early money bleeding into what wanted probably to be almost a falling wedge right shoulder, but there was too much buying strength coming up underneath along here, so you ended up with the grinding up line. You ended up with 3 impulses, and we talk about a key inflection point, which would have been a break in there, which you'll see on a lower set of numbers. However, it's not HVF, a hunt volatility funnel setup. It is very much how the only way you slowed down enough for that to be technically by desire a right shoulder. Don't forget, you did in fact get your interaction there, 67.5 on that second impulse, and that is the extent of your dip. And it's quite clear that the key inflection point there led to an impulsive move. So everything about its behavior has told us that we are probably on the right track in terms of our diagnosis, and that would be our armpit 2 at the first interaction with the 67.5, making this area here that grinded up your head. And of course, as we've already described, your shoulder. So this is a break that's going to take you to new highs in our overall perspective for crypto. This is a break that should take you through 80,300 as part and parcel of this reversal structure. Again, don't expect traditional technical analysts to recognize this. This is unique to HVF method. And we'll have a look at this on a lower time frame. That type 3 rising wedge that is squeezing higher and then got that super spurt. Now people say, oh, it's because of the news, because of the news. That beginning of that potential news being priced in was the reason that these lows didn't come much lower. In fact, that they had such a steepness to them, and that we failed to get a falling wedge or even a symmetrical horizontalized, as we like to say, HVF. You just were grinding higher. Too much power coming back into the market in lieu of the expectation of the rate cuts being some of this. So the notion that Bitcoin is independent of macro data, the dollar and everything else, I'm hoping we dispelled this. We started the better part of 4 or 5 years ago pointing out that dollar strength and the drivers of the macro economy are very, very relevant. More people are now engaged in that. Many are tying Bitcoin as a risk on to equity indexes like the NASDAQ and the S&P. But in actual fact, it's Bitcoin dollar, guys. And risk on, risk off starts with a fact of whether there's fear and people are charging into the dollar or there's dollar dominance. or whether it's actually getting an easing point. And the key data that we referred to in our opening statement here is actually behind this reversal generally. So we've also had during this period, silver and gold do very well. For those of you that aren't watching that, we've done very well on coffee and softs and then rolled those profits into, as it was softening, excuse the pun, into the likes of silver for outperformance. And we got a major triggering event on silver. And silver has been running much harder, as has gold, than Bitcoin during this phase. However, now I have an assessment that feels Bitcoin might be coming back into season again and will start to perform exceedingly well. And more importantly, the fact that it is driven by Bitcoin dominance. I want to just highlight that for you guys and take you into the Bitcoin dominance chart. Let's get him in there. To one of the key aspects that highlights that a lot of this is macro is the fact that it's Bitcoin dominance driven. Where do you think the institutional money goes? Into small cap altcoins or into the higher beta asset class for most people, that is Bitcoin. And which has the volume and the liquidity. Of course, the institutions chase into the volume and the liquidity, and that is Bitcoin. Now you can see that since this pullback, we broke over here. We had a pullback again to roughly the 53%. And then as this started stirring, you can see the Bitcoin dominance. We had a pullback period, and then recently again back up for Bitcoin in the dominance phase. Now we're starting to see some of the alts kick. So you saw Ethereum suddenly have a surge overnight. We will touch on Binance, which has been in an amazingly tight coiled structure. We'd given that one to you before. It got postponed. The first draw failed, it must be said. And then the second draw has set up, and that is now triggered, and we'll be covering that for you in a minute. So as some of the alts start dusting off their pants and standing up out of their lazy chairs, what you'll start to see again is a bit of a contraction on this. But first, institutionally, the Bitcoin is the first coin that those typical non-crypto mega institutions will buy into. They need liquidity. They need the liquidity. What that then tends to do, though, however, is it gets all the crypto community up and bullish again, and they'll go buy their favorite alt. Now, in the second half of bull markets, we expect the likes of ETH/BTC to start to overperform. And let's cover the fact that ETH had a stronger night last night. And it must be pointed out, Ethereum's actually been pretty dull and boring, I think, to a degree. Solana has eaten its dinner to some aspects. Solana was the early runner, but you can see that there was quite a big rejection here. Now, once you start getting these broadening structures and an increase in vol, and this is what we call a descending broadening structure, you'll eventually get some form of break to the upside. That doesn't stop it from coming back into the range and giving us our famous watermelon smile for a while. But in the end, we would expect the 0.052 level, so that's roughly the 5% mark, to fail, and for Ethereum to start trading stronger against Bitcoin. Let's just remind you on a bigger time frame how that one looks. And it's one we've watched, and we've had a few false dawns on, it must be said as well, with Ethereum. You can see there's been a couple of spikes only for it to disappoint. I'm just going to switch all the annotations off for a bit, and let's go right up to the monthly, shall we, and bring you that one in perspective. So this is on Binance, and this is where we're at. Now, candlestick charting is one of the best ways that you can actually get a feel. Simple, basic candlestick charting. You don't have to get smart. You don't have to go Ichimoku and fancy stuff, most of which is very, very dodgy fundamentals. You can just go to basic candlestick charting to assess where the lie of the land is. So this is an Ethereum BTC chart. And this has shown how Ethereum dominance came about over here. We were also involved calling this reversal and saying Ethereum dominance again until it ran the better part of the 10%, I think, roughly around here. I've taken all our annotations off. And since then, ETH's been in a slow decline against Bitcoin. The first part of the bull market, Bitcoin dominance orientated. There truly is nothing new in that. And when you add the notion of the ETFs being the main driver, and institutions, they're not going to start at the small cap end. They're going to chase the liquidity, as I've already stated. So this particular bull market especially has continued to have BTC type dominance, and we saw a BTC dominance breakout from a long-term low containment area, something we've given you on this crypto channel before, pointing out that the Bitcoin dominance is going to be big. And in many of our trades, we've taken a small element of Bitcoin always with Binance to the long side, with the other individual alts, on the basis that for now, Bitcoin is going to dominate. But could that start to change? When you have a look at this now against ETH, which is it is the next biggest and most meaningful alt, and you do the candlestick charting, has it finally put in that falling wedge? It was grinding lower. As we've said before, many a false dawn. This is a monthly chart. So you had a couple of attempts in these monthly charts on these spinning tops, but in the end, they ended up spinning tops, not hammers. This is the first time that we are potentially on target to do a hammer. That is a small doji hammer, it must be said. Unfortunately, it was triggered and then came back into range over here. So it failed to take out and hold above. And you ended up back slightly below even. This was more shooting star-esque, whilst not in the context of a shooting star. Shooting stars should be at localized highs like that. So this has been a range, a very low vol range. If you look at those candle bodies, I'm encapsulating them there. And in the end, you broke to the downside of that. You got one small hammer, still with a red body. Now you've checked and tested again with rejection, and now you are trading up with a green body. This could indeed be a meaningful candle for a reversal in the relationship between Ethereum and Bitcoin. And that is quite a long wick to the downside. I can also highlight to you we're the 21st of May, so the month is not over, but it's certainly more than done. There's roughly 9-10 days left, and I would be shocked to see if this reversed back down and gave you another spinning top. This is called a rickshaw boy, by the way, a long-legged doji. To create a rickshaw boy for us, we would have to trade up and come all the way down and close again here, and then we would be like that. So that would require another upside and rejection all the way back down to do the same, which is more a bit of volatility and indecision. That indicates indecision. If it is to stay a hammer, very similar to what it is, or the green candle continues to advance by the close of the month, you can start to surmise that Ethereum's underperformance to Bitcoin could be getting to a close. That means the second biggest alt will start to put in decent performances again, including outrunning Bitcoin, as it should, as a smaller market cap. This, of course, could also point to, and everyone will start joining the dots on fundamentals, what the outlook might be for an Ethereum, ETF, etc., etc. So typically, remember, bull markets, you tend to drop down the market cap. Again, you'll have some higher runners like FET, Solana, which wasn't the highest market cap, but it was a very early runner in this bull market. But generally, you're not badly served starting with Bitcoin dominance in the early part of the bull market and dropping through by market cap generally as the bull market starts to mature and enter into its mid phase, which starts to involve the alts more. Dropping through the market cap can serve you very, very well. Okay, we've said what we wanted to say on FBTC. Let's just show you the USDT chart. I think we've managed to avoid doing that while talking about Ethereum for so long. So let's just give it to you. And now you'll see the move on its own against the dollar. And as you can see, Ethereum still to make a new high following the 2021 bull market, which was, help me with a number there, 4,000, excuse me, 868. We are sitting at 3715. So it's going to be interesting. By the way, interesting small news flash. Back to the eyes, look at the eyes. FTX, there are some people that were holding tokens. 65% of the FTX claimants were actually in USDT. But those that held tokens are having their upside socialized to make the USDT guys whole, which is why those with claims less than 50K could be getting 118%. That would mean roughly 9% interest for a year versus on top of their dollar value over 2 years. So there is a group of people that actually held tokens. And if you want to find out who that is, follow me on the Crypto Sniper. I'll retweet them out. That's saying, hold on a minute, don't over socialize those. I actually held Ethereum during that period, and some people held Solana, which had a doubly difficult time with the FTX going under, being sold off, and has subsequently had a turbocharged rebound. So 10x on Solana, 3x on ETH. If the bulk of your losses were in a crypto, you should have had some of the reflation of the tokens instead of the mark-to-market USDT. That voting and all of that going on as well. And I think November is the date for the sub 50K guys to get made whole if everything goes through. I'd like a little bit more of my ETH value, thank you very much. And I'm expecting only for that to be resolved in the following year. Okay, so that's a quick little update on that, but you can see ETH/USD are over here. This is a strong candle. Let's just have a look at it on the daily, so that brings a bit of context. You can see that's quite a nice move. We talk about falling wedges all the time, and how these are squeezies of their own, and often generate excellent entries. And I would encompass this one very similarly to how I'm drawing now. And you can see from that we have had a good pop out of the falling wedge. So probably a big first impulse in here, a very bloated grindy one like that, down to there with two lows, and then the 3 almost had a primer of its own. Now you would argue the 3 was done, but you then had different color. Let's just draw it, a bit of zigging and zagging and going quiet in there before we started to get a bit of zip. So in truth, the beginning of the recovery of ETH actually probably began here, but you've just had your biggest surge. So you went out of the falling wedge, you've had your return move, and now you've had your biggest pump away from it. So this is pretty positive, and overall I would see ETH running these highs for the in the not too distant future. But again, you've had a big stretchy candle, so it's not the time to whale in with leverage, because you would have to put your stop pretty far down on that. I think the only place you could put a stop, and it's kind of a technically obvious one, would be at the other side. Some people say you shouldn't retrace the half, so maybe you could go a bit below the 3.3. Dangerous place for entries if you weren't already long. Let's pivot on and have a look at some other charts. So this guy is the guy we've been talking to you about, and that is the Binance, our friend in Binance. Let's just do this one properly. So this upside takeout. Now, we were expecting a chance that it could come early if Bitcoin was going to maintain. Bitcoin didn't. We failed out there on a tight stop. But in fact, the pattern actually improved, because this was quite steep grind line underneath there. A bit of exhaustion there, and you broke it to the downside. You can subsequently see the setup as it turned out in the end. And this is pretty positive, and this is a triggering event. So where is it going, you ask? Well, I'm going to change that. Let's get it to the 12-hour, get a bit more detail on it. What time frame pattern is it? It's probably a daily stroke 12-hour. It's kind of on the doorstep of that. But I'm going to draw this one on the 12-hour here for you, using our tool for HVF setups. And there you go. So if we put that on, so here we are with a draw on the daily. I'm staying with the daily in the end. This is a triggering event for us. You've run our third high for the HVF setup. Plus, as we highlighted, this squeezed inside a squeeze. That's why this has taken so long, because it coiled, and then it coiled up on an even lower time within a coiling up. So this was a very, very tight squeeze. We'll drop on lower time frames to show you that in a due course, but this gives you super tight money management. Essentially, the risk reward on this is a lot higher for the fact that it did that. But it does obviously mean it takes longer for the pattern to come. And that's what happened to us. We were early to the potential trade. It told us we're not ready by taking out our stop. And then it set up and extended. So the pattern extended. So the pattern has triggered and will probably, on balance of probabilities, work in the end. And you don't always nail it on the first instance. You've got to show the commitment and the money management and sizing to not be butthurt to come back and put it on again. People that get betrayed by a chart or market feel anger. They carry emotion to it. You love the things that make you money and you hate the ones that run your stops. This is absolutely immature trader type mentality and emotionality. These are not emotions that you should be carrying at all. Sometimes you've got to accept in advance that there could be a situation where multiple entries may be required. So we got it wrong on the first instance and it extended, and now it's making back and has already, having just triggered, made back all that was lost on the first and is now in green overall for both entries, including the one taken earlier way back here in the beginning part of April. Once it showed that it was an entry, wasn't ready and broke, we ignored it, left it, put it on the back burner, put some alerts above and below to monitor it and put it out of our mind. Don't let something live rent-free in your head if it's not ready. And we focused on the coffee trades, both on Robusta and Arabica, and the silver and gold trades, built some great profits, come back, and the market is squeezing super nice. And we were entering back end of last week, over the weekend, and some community members even today. So this is an excellent move. It's a clear move, and our expectation is that you could indeed do between 727 and 751 for the upside on this particular target, and you are only just on the bigger fat side just at the triggering event. Of course, if you'd been in early, you could have been at 586, or during last week, you could have captured the early low volatility on a much lower time frame. That is the squeeze within the squeeze. That is the great gift of HVF trading. If you want to learn more and be inside more of these setups sooner with bigger risk rewards, you don't need huge leverage if your stop is there and your entries are all along this level. So I'll show you the risk reward potential. Remember, this hasn't been achieved yet. It's still only an on balance of possibility rather than something that has been already attained. But you can see you're in the swing. It's so much better than popping down to your local casino for a gamble where the odds are stacked against you. And that's the great value of HVF trading. Do you actually want to make money in the markets? Do you want to actually ensure that you retire out for this particular bull market? I personally feel you shouldn't be over assuming anything in terms of future bull markets in the crypto space. A lot could potentially change, and you should be aiming to max everyone out as if it were the last one. By risk reward, that is 14.16 on the entries, assuming the target is made. By the way, potential for overperformance exists if we are full swing back into bull market with alts participating. This could be incredibly beneficial as a trade. So we have updated you on Binance versus the dollar. We've looked at why Ethereum may finally, bear in mind we need that month chart to conclude, but without anything major happening between now and then, apart from possibly a bit more upside for relative performance of Ethereum versus BTC, you could in fact start to see the market cap overall coming down for the ones that are leader dominators. So Ethereum may indeed be best, which could point to the fact that there might be something favorable in terms of its status and other ETFs in the crypto space. It may be included, who knows? I can only speculate. You guys are probably better with keeping up the news on that behalf. By the way, the link below, first one, here's what you're going to get from us if you click that link. We are here and specializing in building wealth in reset times. We've highlighted that both debt and fiat is being devalued at an accelerating rate. That's why your cocoa's going up. That's why your coffee's going up. That's why copper's going up. All these real world things. That's why your inflation that you are experiencing is far higher. You are in a stagflationary environment where they are devaluing debt as the biggest issuers of debt. They are over proliferating it, and there are less buyers, willing buyers, let's say, that wish to accumulate it. With the devaluation of debt is the devaluation of fiat. It doesn't matter if on one day the dollar is stronger or weak or month than the yen. Overall, both will be devaluing debt and their currencies. This is why you're going into a hyper-stagflationary environment. If you have fiat in your bank account, you are going backwards as a guarantee at a greater rate than ever before. So hear me now. However, knowing what to do with that fiat, how to bring it to bear, how to ensure you build wealth in this crypto bull market and other bull markets so that you can become financially independent, become a wealthy slave at the bare minimum as they are bringing about potential bank collapses and, of course, potential hacks and many other forms of you losing that fiat in that banking system beyond the inflation rate, which is destroying it. In short, it's not the season to be overweight dollars, euros, pounds, Australian dollars, New Zealand dollars, any South African rands inside a bank account. There are so many things that you could be doing that protect yourself and give yourself optionality and see your wealth go up with every fiat devaluation. And that is going to be consistent. The inflation rate is far higher. If you understand that and you wish to maximize this crypto gain, in other words, get into the best tokens that are suitably liquid for accelerated upside in the crypto markets, and you also want to know how to preserve that wealth as you're earning it in the best possible way, our community specializes in that. Our business specializes in that. Hence why we are the Reset Sniper, the Market Sniper, and the Crypto Sniper. Click the link below. Book yourself a call. It costs nothing. Do us the respect of showing up, and you'll be able to have a discussion about both our community and, of course, some of those other aspects that will preserve you. Can I also warn, in this hyperinflationary environment, it's not quite hyperinflationary, but this high inflation environment, not only is your buying power of your money devaluing, but you are being dragged into higher tax brackets. It's called bracket creep, brought about by everything costing more, making more income, paying more for your bread, continues to sweep you into ever higher tax bands. And capital gains will start to become a key problem. It's not at the end of this bull market that you should be thinking about what you're going to do to protect yourself from excessive capital gains from your nation state. And we also delve into what you can do to have zero capital gains perfectly legally. That's right, zero capital gains. Let me assure you, the end of this bull market, there will be way more people caught and dragged into a tax net than ever before as a result of what's going on. And they will be measuring it in those devaluing dollars, pounds, and euros, and you will be sent tax bills. And it's too late to deal with it afterwards if you've already dragged. There's real reasons why we say book a call now to discuss this and more. Maximize this bull market, preserve in this bull market to ensure that you are meaningfully moving forward in one of the most extreme financial economic events that have ever existed and will make up economic case study for all of history. Listen to me now saying that. Big in the eyes, I'm talking to you. This is the single biggest globalized financial state of events that are occurring right damn now. And if you do not understand what I'm saying to you, follow and watch our other videos, but get to that understanding. You need to protect yourself from government. You need to protect yourself from inflation. You need to protect yourself from the tax extractors. You need to protect yourself from banks. These are all key core elements. We have a model to help you with that. Anyway, that's it. Thanks for watching. Give us a like and a share. We hope to keep giving you free alpha on our YouTube channel, but bear in mind our community gets served first. You're getting this information later. If you want to be part of those that are in the loop early and be part of the other HVF trades that we may have on in the crypto sphere and the other markets, you may want to book that call as well for reasons of participation from the outset. Bye for now, and thank you for being a follower.